Volatility. Hey, everybody, it's me, the Einstein of Wall Street here, and I'm here with the milkman himself, Kono. What's up? Welcome, welcome. How are you? Happy
Yeah,
Friday.
I'm good. Thanks. Happy Friday to you too. How
Good,
about
good.
you?
I'm good. I'm good. It's kind of a wild and crazy week, and I really wanted to get your
Yeah,
perspective. So many of us are so, embedded in this market. Those who are traders and those who are in the media. I think this 2026 has been a kind of a hard year so far. I have not really gotten a lot of clarity, and usually I'm able to come up with uh, uh, um, some clear vision on what the day to day, week to week, month to month is. And so I'm reaching out to you, Mr. Milk Money, to get some clarity from your perspective, because maybe there's less noise in your world and in your mind than there is in mine, being here on the floor, and just kind of give me a little clarity on what's happening in 2026.
yeah,
Just to give you a perspective, when we met, we were closing out 2025, which was quite an amazing year. Think about all the things that were thrown at the market in 2025, everything, a couple of global wars, a government shutdown,
yeah,
interest rates, a new administration, tariffs, a mid spring mini crash that we had, so many things. Yet the market was able to close out the year, even with the government shutdown, almost at record highs. So I was impressed with that. The resilience of the
yeah.
market is quite impressive, as I think you would agree with me. My first question would be, what are you seeing? How did January, there's an old adage on Wall Street that how January goes, so does the year. Meaning that if you have had historically a positive month of January, then the rest of the
Yeah.
year in history has been a good year. How did you, what's your perception of January? What do you think January told us about the economy and the markets? Because I think they're trading a little bit in a divergence.
Yes. Well, because I think that the Dow Jones, for example, during January, it had a 1% gain, which is not amazing, but it's still decent, but it's lower than many of the, say, other February months that marked a kickoff to sort of a mini boom that usually always happens. And what it really showed, I think, is that the markets themselves, they still have optimism, but they're being a lot more cautious than last year. Because last year they weathered all those things that you listed and still ended up with more than double-digit returns, which was incredible for them. But right now they're being more cautious, I'd say, and a bit more pessimistic, especially like the last job GDP figures show that the economy in the fourth quarter grew only by 1.4%. So they're just being more cautious and more careful to see if they really want to bet, like, because many things are going down, and it's like not so much volatile as waiting for big things. For example, like they're going up a bit too because the emergency tariffs by Donald Trump got struck down by Supreme Court.
Yes, I was going to bring that
So
up. Yeah.
yeah, that
Well, that was the look. So everybody who's watching, we're here on
yeah,
February 17th, 18th, whatever day it is, and just before Kono and I started to talk, the global tariffs that Mr. Trump has installed into the global economy were shut down by the Federal Reserve, by the Supreme Court, and there was dissent amongst the ranks. Three of the very Trumpified Supreme Court judges, Kavanaugh being one
yeah,
of his appointees, and Alito and Clarence Thomas, who are all known to be very Trumpers, were the ones who disagreed with the conviction about that. But I'm going back to your point, is that you used such a perfect word. I love the fact that I love the way your mind works, because people they're not negative about the market. They're but just a bit more cautious. There was sort of that irrational enthusiasm that happened in 2025, that the market could go do no wrong, that AI was on its amazing trajectory, and I still think it is. But I still think it's much people's caution around the Mag 7 and around tech is quite palpable. You can feel it in the marketplace, right? And we did see one of the most noticeable pullbacks in tech in January. Is that your gut on that?
yeah. Because like many investors actually in the Mag 7 have really either pulled out or just really stopped investing more and more into it. like many of them are just going down or remaining at a stable price line. Because last year, everything was about AI. Anything that wasn't AI was sort of seen as being outpaced, sort of like, say, 2001. And many investors are thinking, well, we've invested hundreds of billions of dollars into it, and they're going to invest almost $1 trillion in AI expenditure, and for what? Like not even that a lot of revenue added. So they're just being a lot more careful about it and cautious.
Okay, so we know that what's curious is so we know that a lot of the big companies have committed hundreds of billions. Oracle, Microsoft, Google, Meta have all, and they are not big AI companies, but they have committed hundreds of billions because they are visionaries into the building of data centers, which are 3 to 5 years out. And we know that what's frustrated some of these impatient investors, the people who are sort of just the forever bulls in the tech sector, are saying is they're a little impatient about the timeline. That because a couple of the companies like Oracle has pushed back on how soon the AI data centers were going to be finished. And so one of the things I've been saying is, you know what, look, feelings are not facts. That just because the investors are a little impatient with the timeline doesn't mean that the story has changed. Right. At the end of the day, I would think you would agree with me that the trajectory still, Mr. Dan Ives, who's one of my mentors, who is one of the fathers of AI, is always says that we are in the third inning of a 9 inning game in the big industrial revolution called AI, and that it's going to go into extra innings. So it's just the beginning phases, and that
Yes.
the demand for AI is unmatched, and that it is a revolution that no one could have ever foreseen how aggressive it is. So I
Yeah.
would think you would agree with me there, correct?
Yeah, I agree because AI, like other mini technologies, it takes a good amount of time for any technology, be it electricity, railroads, or even the internet, to really be implemented into business. So as you said, Ed, it's more like the third inning because people are starting to use it. So there's definitely a massive opportunity considering how game-changing this sort of industry is.
Okay, good. All right. So let's settle this. So that was, I think, one of the things. So that describes what January was about. It was a little bit of a sputter, two steps forward, one step back, as far as people's sort of impatience and people's cautiousness around AI. I think, but we also saw that, that uh, in January, we started getting the earnings for the fourth quarter.
Yep.
And I think that, what do you think? I mean, I think people were a little bit disappointed. Over the last couple of
Yep.
quarters, the banks, which are the first ones to announce, have been very strong coming out of the gate. And I think that maybe it was due to the government shutdown in the fourth quarter or what. But what do you think was the reason why the earnings this quarter that we're getting? We're not done yet, but we're fairly close to being done on the reporting of earnings from Q4 of 2025 have been a little weaker than of late.
Well, it's just because of a multitude of factors. Everything affects the financial markets. Everything, the financial markets affects everything. But what I really think is just an overall slowdown in spending as businesses start to slow down because the GDP growth is slowing down while there are risks of sticky inflation, as the Fed pointed out in their Fed minutes. So
Yeah.
many businesses are going to go on expanding and investing a lot in R&D, it, and they're becoming more cautious and want to really just slow down the amount that they're doing and really closing off, say, some parts of their business. And many of these businesses, they're still strong, don't get me wrong, but their earnings are slowing down mainly because everything's slowing down as the US is sort of slowing down from its boom and it's sort of flying ahead with GDP growth
Yeah.
at the objections of all economists who said, it'd be a recession like 2 years ago.
Yeah.
So it's just sort of the pullback. It's kind of like the jobs pullback. Um, After the pandemic, many companies got a multitude of workers, but now they're actually pulling back. So that's actually the main reason why jobs data is actually slowing down, on
They
contrary
got a
to
little
AI.
bit ahead of themselves. They
Yeah,
were leaning over the edge of their skis in
yeah,
a way, right? I
yeah,
mean, because we know that post COVID there was this massive surge of of people hiring, of the big hiring surge as people
Yeah.
started to go back to work, and then people got a little bit ahead of their skis, and now it's sort of normal, and it's normal caution. And I think I appreciate what you're saying, because people need to be given a little sense of this is okay, that pullbacks are
Yeah.
normal cycles of the economy and normal cycles of
Yeah.
markets. Markets go up, markets go down. When a market is
Yeah.
surging really fast and furiously, right? A pullback is healthy. We talk about it from a day trading perspective. There's a trade called the trend trade, right? A trend trade is when a stock is going up in one particular direction and it pulls back to the 9 and the 15 exponential moving average, and then it continues to go higher. When things go
Yeah.
straight up without a pullback, then there's an
Yeah.
opportunity for them to fall. But if they
Yeah.
pull back and they build
Yeah.
a foundation,
That makes it more like stable. It's not like you're gonna have a stock company going up straight unless it's Bitcoin,
right, or
but
straight
you saw
down.
Bitcoin, it goes straight down. So
Exactly.
like there's always going to be some pullback if it's gonna remain, I'd say at least tethered to the ground in some way. So that's basically what's been happening for many of these fourth quarter companies.
Okay.
It's sort of pulling back, I'd say, and they're just becoming more cautious and not willing to spend as much really on anything and being more careful. Except because basically the only sector that's really producing a massive, massive amount of growth that's really willing to expand a lot is, just AI or visionaries that have to do with AI. Because many of these, say, financials and well, defense is also doing very well, but many other industries aren't really expanding as much. So it's really just them slowing down, I'd say.
Okay, let me interrupt. Sorry to interrupt you, but there's a question that you need to ask. Is that at the end of last year in December, that Jensen Huang, the CEO of NVIDIA, right, who the father of AI, mentioned that the only thing that will be in any kind of an impediment to the AI trajectory is going to be energy. That is going to be the sector that we need to look at. That
Yes.
we are spending hundreds, almost trillions of dollars in building these AI centers, and in some way we're going to have to power the AI centers. And so his feeling was that we need to really get a handle on whether it's going to be solar, nuclear, gas. What is the energy? And it cannot impact the local grids. Right, you know that, right? The energy grids in these individual places where these energy centers are being built cannot be impacted by the data centers. People don't
Yeah.
want that. They don't want the cost of their personal home residential energy to go up because a bunch of super rich Wall Street
Yeah.
guys are building data centers. You know what I'm saying? So
Yeah,
he
because
said,
oh yeah, sorry
no,
to
no, no,
interrupt.
go ahead. I'm just curious what you're, so what do you think about that? The energy sector is probably going to be one of the next things to really take off. Don't you think? The ones
Yeah.
that whatever
Well,
they identify.
yeah, because like they're gonna need more extra energy infrastructure than there already is existing in the United States. So it's not, and I don't think the US can double its energy infrastructure in a few years.
Right.
So they're definitely gonna have to build a lot of off-grid energy, but that'll be made fairly hard considering that this administration doesn't particularly like renewables. But they're definitely going to need to use them because they're going to need like 100 extra gigawatts when the US only produces like 80 gigawatts a year.
Right.
So it's going to have to come from a combination, really. It'll be a boon for renewables if they get this much business because renewables, they provide a good, clean source of energy that's also efficient. So it's really going to take off. If you have to produce that much energy, I think this really could become a sector of massive amounts of growth if they're going to provide
Do
get
you
all that capital from those companies.
you think it's going to be a mixture, a little bit of gas, a little solar, a little
Yeah,
nuclear, a little bit of all the different energy sources coming
yeah.
together?
But because there's simply no way logistically to do one one of the energies at once logistically.
Right.
But over time, I think more and more renewables will start to really take that stand, and it'll be a big boon for them.
I like that. I like that. All right, talk to me about gold and silver. Do you have
All right, so
much of an opinion about the massive rise
oh
in gold
yeah.
and silver over the last month, and then the severe 30% fallout that we had after that Friday? Go ahead.
Well, basically, gold and silver, they've been rising mainly because many investors see them as a excellent hedge against volatility, which I do too. I wouldn't recommend them to be like invested in a large part of your portfolio, as with any commodities. But so I think that they're gonna go back up if this sort of trend of volatility from this Trump administration continues. They mainly fell, it was a one-time fall at most because Kevin Warsh, many investors felt that he was just a lot more qualified than many of others, Mr. Trump's more radical picks that might be even more
Do you think
dovish.
it was a bit of a rug pull for us? Don't you
Yeah,
think that Mr. Trump sort of set us up for a very dovish next Fed
yeah,
chairman, and then he got Kevin
an
to
experienced
come
guy.
in, and he tends to be a little more. He first of all he was very hawkish. Then he went into the private sector, and then he came out. And the day that he announced that was that Friday that I think it
Yeah,
completely upended the. It's so funny because net there's not a real relationship between gold and silver and the Federal Reserve, but for some reason that announcement, which kind of felt like a rug pull to me, upended the whole commodity market. Right? Doesn't it feel that way?
yeah. Well, I think it's just a one-time connection because many investors were dumping into gold. People were like so bullish about it, it's never going to stop rising.
Right.
It mainly fell because there's a one-time connection. Because there's a hedge against volatility, and then you have this guy that many investors see as very qualified and very good at his job compared to many other picks.
Right.
Many investors just sold out because and the dollar actually strengthened a lot compared to other currencies because many investors just regained a good amount of confidence in the US dollar because it had been declining a large amount.
Right. It has been the
So, yeah,
biggest falling entity that, with everything else going up in 25, it was the only thing that and oil were the only two things that went down besides a little bit of crypto
yeah. So that gold just fell because investors just regained confidence suddenly.
in the dollar.
But I don't think those sort of one-time drastic falls are gonna happen a lot because it's more of a one-time event. It's not like you're gonna have
It
like,
was a
well,
one-off.
we appointed a new Fed chair every day, so it's gonna go down 30% every day.
Right, right, right.
So
Okay. But I love the fact that you agree with the correlation because
yeah,
it's not a normal it's not a
yeah,
normal train of thought that we would have thought that. But I think there were a couple other components. I think I mean, what's your opinion on what's been happening to the crypto market? I know you're a
yeah.
little a bit of a fan of that just because it's so intriguing and exciting. But
Yeah.
it's been under so much pressure. What are your thoughts
Oh yeah.
on Bitcoin?
Well, Bitcoin, it's had a bit of a slaughter because Bitcoin always has these things called crypto winters, which are basically during the winters, they usually fall a good amount. But this crypto winter, it's the chilliest. Well, it's not the chilliest, but in dollar terms, it is. So it's fallen a lot from 100, its peak of $123,000 to right now around $67,000,
Right.
which is like a 45% loss.
Yeah.
And they're mainly having it because there's a lot of downward pressure. So because crypto, it's not so much based off value as really what investors together think
Are
of
willing
it.
it's worth.
Yeah. So it's more about the vibes. So many investors started to lose their vibes because this president's knee deep in crypto, so it sort of loses its independent enthusiasm, really, because it was designed by Satoshi Nakamoto,
Right.
whoever the heck he was,
Right.
to really be like a separation from central banks, the government, anything. So now that it's really getting regulated, it's mainly lost like its point. If it's gonna get regulated, not be really independent of the government and get regulated by it, then what's really the point of it? And I don't think it's dead for sure because many investors still believe in it. But I think it will take a bit of a time to regain its vibe. And also the downward pressure from investors starting to think, hey, maybe $120,000 for a thing I can't touch is a bit
Bit
overpriced.
overpriced. So what do you
So
think?
it's like a correction in sort of
Yeah, you're right. You're
two,
right. It's funny, and
but
people should know that
percentage.
the crypto winters do not necessarily happen in the winter, right? They can happen
Yeah.
any particular time of year. But you know what's curious is that I've noticed too is that a great analysis. I'm so impressed with your analysis of these things. That's why I really wanted to talk to you because I've been, I know I look like Einstein. I'm not that smart, but your take on these things is so extraordinary. We do know that a lot of the people who are buying Bitcoin are buying it on margin. Okay. We also know
Yeah.
that there are a number of companies like MSTR, right? I know you had
Oh
mentioned
yeah,
that
Michael.
last time.
Oh, strategy. Yeah.
Right, MicroStrategy. These are companies that are invested heavily in Bitcoin itself, right? They are crypto-based companies, but they also a lot of them were buying Bitcoin back in April when it was in the
Yeah.
70s and 80s at a very high margin. Right, sometimes 50 to 100x margin they were paying. So
Yeah.
when the market started to fall back, I'm wondering what your thoughts on this are. And once the crypto market started to break down and started, you mentioned it as a slaughter, but I mean, you look from 125 down to where it is now. Once it started to get to the level where they actually were buying it on margin, there were a lot of margin calls. Right? Don't you
Yeah.
kind of feel
Yeah. Margin
that
calls.
contributed to some of that sell off in Bitcoin?
Well, yeah, it's like a self-inducing sort of doom loop because many of these investors are heavily marginalized, as you pointed out, like even up to like a few hundred times. So once it starts going down, there's margin calls, and many of these companies are operating with very low cash flows because they're investing all. So they have to sell the crypto to really meet those margin calls,
Yeah.
and then it continues to go down. So even more investors have to meet margin calls that are bigger. So it's sort of self-perpetuating
The
into a
self-fulfilling
point,
prophecy.
yeah, into a point real it's really been self-corrected a lot. It almost to an unnecessary extent because of these debt-ridden and margin-ridden investors.
Investors
So
and their
yeah,
portfolios.
yeah,
I,
so I think they're going to be a lot more careful around it because it's lost its vibe and where it really should be because it's lost its vibe of being independent
I like that.
currency of
That's it.
any government and
That's a
like
really smart point. I'm sorry to interrupt you about that because you are right. A lot of people's attraction to it was the decentralization aspect of it and the digitized part of it, and the fact that it was resting independently of the banking system. And once it becomes a little more mainstream and it becomes a little more part of our everyday life as people, it's a two-sided coin because that validates it in a way and gives it a little more onus, but at
yeah,
the same time, those who are buying it for the sort of the shadowy aspects of it are no longer that their vibe is gone, right? They lost that kind of cool decentralized vibe from it.
yeah, and it's just a lot of downward pressure as you mentioned, like the margin calls, the loss of vibes, investors just really not wanting to invest in something so expensive that that is so volatile. And it's really just lost a lot of its vibe and really goodness that perpetuated to its rally and its massive rally and its peak in 2025.
Okay,
So unless it can really regain these, I don't really expect this crypto
kind
winter
of a
to fall
mojo.
that.
It needs to get its mojo back, right? Okay, let me. Well, I appreciate your time. What time is it? All right, so let's a couple more quick questions. So, um, we're now coming through the middle of February, all right? And the market, we did have that one. So we did actually have an intraday touch of 7,000 on the S&P 500, although we
Yep.
didn't stay there very long. We
Yeah.
did, we did, while tech was under pressure, we did have a lot of rotation out of tech and into the Dow Jones Industrial Average, right? We did see
Yeah.
the Dow hit, and I'll have to send you a Dow 50,000 hat if I didn't give one to
Yeah.
you, but when you were here. But we did see that people got started buying that last week when we had the surge of the Dow. There was that the market sold off aggressively on Thursday. If you remember, we had those payroll data came out that was some of the worst unemployment numbers since the Great Recession, right? And then people started selling the market on Thursday, and everyone thought, oh my God, this is the big capitulation. And then we came in on Friday morning and everybody was buying the Dow. You remember that we came in, it surged up to 50,000, it broke through, and then we had 4 solid days where the market was above 50,000. And so, I know it's fascinating, the differentiation between the Dow and the S&P, right? That it's heavily tech heavy, and then the Dow is very industrial heavy.
Well, yeah, because the S&P, it failed to break through really to that 7,000 goal. I mean, it reached it once for for during the intraday trading, but I think that many investors are really rethinking their decisions. They're like, do I really want to really invest a lot into this tech heavy, especially as investors are really starting to see more of a correction in say like the Mag 7 or really any sort of tech and like say software, it's been getting
They
hit
got hit
very
bad,
hard.
right?
Yeah. So many investors are saying, well, let's rethink. And some of them are preferring to go to the Dow Jones Industrial, which historically has just been industries that have always performed well, while the S&P, in recent years, it started to include a large amount of really all these tech stocks that make up a large amount of really the entire portfolio. Like
Of the
Nvidia,
SPY.
I think it makes up like double digits of the entire value. So investors are just doing outflows into more, I'd say, tethered to the ground and just like more realistic based industries with like not so big like earnings to valuations ratios.
Okay, so let me ask you a question. As an investor in the market, and I know you are one, when times happen like this, when we have pullbacks, I think it's really important. One of the reasons I want to speak to you is because I want people to just sit back and be a little calm, that this is what
Yeah.
markets do, right? That markets can't keep going straight up forever, and that market pullbacks are healthy. And I know you're a believer in that, right? What do I also don't want, I think it's important people to know that when some parts of the market are being sold and some stock, those are more buying opportunities. If you look at every crash that
Yeah.
we've had since 1987, the 2000 bubble, the COVID, the crash of '09, these have all been better buying opportunities than selling opportunities. Are you feeling that this little pullback and pause is more of a buying opportunity or a sit back and wait opportunity?
Well, I mean, you can actually sit back and wait for the market to go down more. Because I think that investors, they're being more so calm as really a pullback. I mean, it's still gained during February, like 1%.
Absolutely. Yeah.
But like, it hasn't gone down yet. So it's never great to buy when it's like still going up. I mean, sure, I actually it could be a decent opportunity to buy, but it's also a good opportunity to wait because the market it's at a sort of inflection point to really see if many of say AI really pays off. Because if it doesn't, then the whole market will get paid living hell. But I think that it's still a decent time to invest, really, because the market still has a good amount of strength in it, especially say the Dow Jones or like index investing, because they're just really stable. So in case of any sort of pullback, that's definitely going to happen in the near future. Any small pullback, really. I think it's a great opportunity to buy because market seems steady. It still has some energy in it, especially if you invest in anything that doesn't have to be too tech heavy. Then you got some good returns. Like for example, the Dow Jones, it over the past 6 months, it still had a 10% return.
Right.
That's half a year. So
And what do you think is going
I
to be?
think it's a good buy.
Okay, I like that. And so, last question is, what are your thoughts as we head into the spring? Last spring, February 19th was the high of the market. We know that that was the first time Mr. Trump mentioned your free meeting will end in 10 minutes. Okay. We know that last February 19th, which is it's a year anniversary now of what I call the mini crash, right? The self-inflicted crash because of Mr. Trump's
Yeah.
the dissemination of information about tariffs. On February 19th, the market started to sell off, right? And that was a year ago
Yeah,
today,
in April
basically.
7th. April
What's that?
7th. Well,
It
April 7th
was
was
the was the was
well,
the was the what was the bottom, right?
that was that Yeah, that was the bottom because April 2nd was the Liberation Day, and
Correct.
investors started to get more. He's like, okay, he's not backing down, guys. Sell everything. So,
Well, it's so curious now that literally a year later, from the beginning of his talk about tariffs, when the market sold off 20.8%, right, from February 19th until
yeah,
Liberation Day, today, it's a year later that they finally are announcing that the Supreme Court is not going forward with their endorsement of this global tariff policy. What do you think about
yeah.
tariffs? And then I'll let you go.
All right.
What are
Well,
your
for
opinions
me,
on tariffs?
tariffs, I see them as a tool that is not particularly useful because all it does is build up trade barriers and create dissemination among your allies while not doing a lot of harm to your enemies, especially because Trump's tariff regime is lets off a lot of exemptions. And it's not like it'll help any manufacturing base at America because the last time we were a real manufacturing world power, because we're a service-based economy right now. Let's just get that out of the way. We
Right.
are not a manufacturing state in any way. So we shouldn't really have, I don't think we should have these tariffs because all they do is really create trade barriers and inflation, while not creating a lot of really helping us in much way. They don't even produce that much revenue. They're not going to fill up the $6 trillion like few
Deficit,
$1 trillion deficit
right?
in, in America, and they don't provide anything useful in the ways of manufacturing. And tariffs, all they do is result in more inefficient companies in the United States getting to do so, which reduces the efficiency of the overall market and just cuts us off from the rest of the world.
I love
In
it.
America, it can make everything at home. So it'll just end up with more sticky inflation, more expensive and worse quality consumer products that aren't,
Well, obviously, in fact, it will affect employment, which is really one of the
yeah.
keys to this whole economy, right?
So that might actually result in stagflation, which we do
Ah,
not want.
that's what we don't want, right? There is
Yeah,
no secret
that
ticket to the stag to get out of stagflation,
yeah,
correct?
because you're faced with a hard choice between you either raise interest rates, which will harm the economy and the unemployment, or you lower interest rates, so then you'll be end up with low unemployment, but also like almost double digit or even double digit inflation.
Correct.
So there's nothing good that can come out of tariffs. So I think that tariffs are really a bad idea because all they do is harm our companies. They don't even help us in any given way. So we really need to not do tariffs because all it does is also it reduces the amount of trust in America, and trust is one thing you can't get back in just an administration.
You know what? Kono, you're amazing, and I love your insight on markets, and I love your insight on the economics of it all. And you're my new go-to, Mr. Milk Money.
Like
And so what's for lunch today?
for lunch, I do not know.
What's the weather like in LA?
Whether it's a bit cloudy, a
Are
bit
you still,
chilly.
is it a cool winter, or you guys is it warm there? It's
It's a
freezing in
it's
here in New
well
York.
it's a cool winter. Well, it's some days it's actually like 80 degrees, and then
Wow,
today it's
that's
like
nice.
6, and yesterday it was like 50 something.
Awesome. Well, I'm
So
I'm so glad that you got a moment to join us. I think I want to do something much more regular now. I think every 2 weeks, let's get your mom and you
oh,
together, Mr. Milk Money, and we're going to take it from there. Thank
all
you
right.
so much,
Thank
everybody.
you.
This is the Einstein and Wall Street from the balcony with Mr. Milk Money. He is my new advisor and my go-to on breaking down this market. This is a big breakdown with Mr. Milk Money. You're the best, and I really appreciate it.
Thank
I'll tell
you.
you one thing. I met a young guy yesterday. His name is Drew Davis, and you're probably going to see me do a couple of things with him on Instagram. He was born with cerebral palsy. And at the age of 12, right around your age, he started watching finance TV and was inspired by me as a young guy. And he started investing in the S&P 500. And he had a elementary school project that he had to do. And his idea was to come up with a hot sauce company. And so he built a strategy around making a hot sauce company. And the teacher told him it would never succeed. and he got really angry that the fact that the teacher did not have faith in him, and he built the company. And this is a young man who has cerebral palsy. He's in a wheelchair, right? And so he's limited physically by his medical condition, but his mind is just extraordinary. And so he built the company, and last year they made 7 figures in the hot sauce company. And the sauce company, they made more than $1 million, and the sauce company was called Cripplin Hot Sauce, right? It was sort of a play on his, he's also does stand-up comedy. He jokes that he's the only stand-up comedian who cannot stand up. So he has some fun humor and light around his disability, which is great. But he started a foundation called Limitless, which is and I wanted just to tell you about it and let the audience know about it. It's basically to help support. They're raising money to support people with disabilities and you're going to be the next generation of young entrepreneurs with disabilities, to try and give them some wherewithal and power behind them to try and let them follow their dreams. So anyway, look him up. The new company's name is called Stackhouse? Stacked. The name of the hot sauce is, I don't know. Do you like spicy food?
A bit.
A bit. Okay, so I'm going to get you some. I'll have it sent out to you. It's called Stacked. It's called Stacked, and he has 5 flavors. And he and I are going to draw. I used to be in the hot sauce business. He and I are going to draw. I'm going to remake. I haven't made my sauce for many, many years. My sauce was called Island Johnny's Secret Sauce, and it was a picture of me with dreadlocks on the label. But I'm gonna make some of my sauce this weekend. Together, we're going to drop 1,000 bottles, and we're going to raise money for this for his foundation to help disabled kids who want to become entrepreneurs. And so I know you're a big supporter of entrepreneurs, so I just thought I'd let you tell you the story. So keep an eye out, okay?
All right. Thank you very much.
It's so great seeing you, and we'll talk soon.
You too.
Happy Friday.
Thank you so much. Yeah,
Bye
happy
bye,
Friday
guys.
to you too.
This is
Bye-bye. Thank
Kono,
you too.
Mr. Milk Money. I'm the Einstein on Wall Street. We're out of here. That's all I got to say about that.